Hi, welcome back to Crypto News. On this channel, we'll keep you updated with the most important news in the crypto market. So if you're into crypto and want to make the most from this market, make sure you subscribe, hit the notification bell. And I'm Chloe, your host today. Let's get started. Today, we got breaking news that EdTech Contagion has just claimed another crypto firm named BlockFi. So, what happened with BlockFi after the FTX found out? Why did the company file for bankruptcy? How will it affect the crypto market? Let's find out today. BlockFi, a crypto loan and borrow platform, filed for Chapter 11 bankruptcy protection on Monday, becoming the latest crypto firm to go under following the rapid collapse of offshore trading venue FTX. For those who are new here, we would like to cover the whole scenario of BlockFi before it finally filed for bankruptcy. So, what happened? Started in 2017 by Zach Prince and Flory Marcus, BlockFi was one among several crypto companies to introduce lending and borrowing where customers could use cryptocurrency as collateral. A few months ago, BlockFi, which promised to compete with traditional banks, were among the victims of liquidity crisis caused by the collapse of sister tokens Luna and USD, which saw at least $55 billion disappear in May. At that time, BlockFi faced many financial problems over the summer, but received an emergency bailout from FTX. BlockFi signed a bailout deal with FTX US, the US subsidiary of FTX.com last July. The deal included an option given to FTX to acquire BlockFi at a variable price based on performance, but the maximum price was $240 million. The agreement also included a $400 million credit revolver facility. In the end, the transaction was valued at $680 million. After FTX collapsed last month, BlockFi froze customer withdrawals on November 10. 4 days after holding, it announced its financial restructuring advisor, BlockFi Research Group, citing its significant exposure to FTX and associated corporate entities. This Monday, BlockFi has filed for Chapter 11 bankruptcy protection, the latest industry casualty after the firm was hurt by exposure to the spectacular collapse of FTX exchange earlier this month. Following BlockFi's filing, Bitcoin price remained nearly $16,200, off about 2% on Monday. So why did BlockFi lending model fall apart? A fairly common practice among investment banks in traditional finance, BlockFi lending model originally allowed Bitcoin holders to make use of their accumulated wealth from its price appreciation without having to sell their holdings. This will help BlockFi and other lenders, including its rivals such as Sanchez Network and Voyager Digital work. Everything could have been fine if one of their large clients, 3 Arrow Capital, succeeded in meeting the margin calls after the Luna collapse in May, leading to the crash in the whole market. The inherent volatility in cryptocurrency also meant the margin requirement for borrow position could fluctuate rapidly, in some cases leading to the both customer and BlockFi as counterparty losing large amount of money through liquidations during market sell-offs. At that time, FTX saved BlockFi by providing the company with a $400 million credit line, especially a loan for BlockFi could tap as needed. However, this time when the market went down after FTX found out, there was no savior for BlockFi, leading to the falling of the lending model due to market sell-offs. So what should we do in response to BlockFi bankruptcy? The exposure to FTX collapse include obligations owed to BlockFi by Alameda Research, assets held at FTX.com, and undrawn amounts from BlockFi's $240 million credit line with FTX US. BlockFi has more than 1,000 creditors in addition to estimated assets and liabilities of between $1 billion to $10 billion, according to its Chapter 11 filing. BlockFi revealed in its Chapter 11 petition that its 3 largest creditor claims are a $729 million indenture from Acarichus, a district loan administration company, a $275 million loan from West Wiltshire, the holding company for FTX US subsidiary, as well as a $30 million settlement payment to the US Securities and Exchange Commission. So if you are a BlockFi customer, you may struggle to get money back. In the FAQ document for clients, BlockFi say clients' claim will be addressed through the Chapter 11 process. You can find more information about the process and your specific situations by contacting the company's claims agent, Grown. While the company asks clients not to deposit more money, it does advise them to keep their accounts open. Finally, if you hold a loan with BlockFi, the company has put it into administrative forbearance. You will not be charged interest on the loan and no late fee will be charged. If your loan becomes delinquent, it will not be reported as such to the credit bureaus. So, what do you think about BlockFi's bankruptcy? Do you keep your fund in BlockFi? How did you secure your fund after all the crashes recently? Share the thoughts in the comment below. And if you enjoyed the video, you know what to do. Hit the thumb up button, subscribe button, and turn on the notification. I'm Chloe. See you in the next video. Bye!